Let me quickly introduce myself. I'm Ladan Nasseri. I'm with Bloomberg News, and I cover Iran. Before we get started with the program for the rest of the afternoon, I just wanted to mention, because there's been quite a few requests, that the presentation of all the speakers will be made available on the website. So if there's anything in specific you're looking for, just have a look at the website and you should be able to find it at the end of our event. So today I would like to introduce as our next speaker His Excellency Dr. Majid Ghassemi. He's the CEO and Vice Chairman of Bank Pasargad, which is Iran's largest bank in terms of paid-up capitals and also the second largest on the basis of market cap, listed on the Tehran Stock Exchange. Mr. Ghassemi began his career at the Central Bank of Iran, after which he served as the CEO of Bank Milliye Iran, only to return to the central bank as a governor. After that, Mr. Ghassemi served as first deputy at the Iranian Ministry of Energy for 8 years, and other senior positions as board member of Esfahan Steel Company and other companies in the Iranian mining and metal industry. He also served as the CEO of several companies affiliated with the Iranian mining of industry and mines. In 2005, Mr. Ghassemi established Bank Pasargad, growing the bank to major economic force in Iran at the heart of a diversified holding group. Mr. Ghassemi is also president of Khatam University and a recipient of the European Medal of Legion of Honor. Please join me in welcoming Mr. Ghassemi onto the stage.
Thank you. Good afternoon, ladies and gentlemen. Excellencies, distinguished guests, ladies and gentlemen, it's my great pleasure to be here today. I will be focusing my remarks on the economic situation of the Islamic Republic of Iran and the important role the banks play in the Iranian economy. As the background scene, please note that for 2016, the International Monetary Fund has forecasted global growth to be weaker than expected. Commodities prices are to remain low. There shall be an insufficiency of demand growth, and the volatility in global financial markets shall persist. IMF has assessed near-term prospects for economic growth in all regions as difficult, with major risks and uncertainties ahead, exercising further downward pressure on different economic indicators, signaling continued low global growth. Increasing threats to financial stability, lack of public confidence and trust in policies, and rising regional geopolitical tensions and conflicts. It is natural to expect that the Islamic Republic of Iran be also affected by this grim global outlook, despite its relative isolation due to unjust sanctions. Nevertheless, based on every reliable economic report, the Islamic Republic of Iran shall be one of the top performing economies in the world for at least the next decade, with annual growth rates between 6 to 8%. Iran is the second largest economy in the Middle East. North Africa, the MENA region, with 2015 gross domestic product estimated at $393.7 billion US dollars. Iran is a consumer market of 80 million with very young demographics and provides direct access to over 400 million people in its neighboring countries. Although the Iranian economy is characterized by a large hydrocarbon sector, the country is moving away from exporting the crude petroleum and is exporting more of petroleum-related products, creating higher value added. The value added of such products, notably the petrochemical products, is gaining importance in the economy of Iran. By relying on the guidelines of the Economic Resilience Meta Policy, or I will call it ERMP hereafter, the country is planning for comprehensive reforms, fostering sustainable macroeconomic stability and an inclusive economic growth. Article 9 of this policy reads, overall empowerment and improvement of the financial system, enabling it to provide for the needs of national economy and to facilitate its stability and sustainability, as well as gaining leadership in the promotion of the real sector. The Iranian economy is a mixture of small-scale agricultural and services sector and a rather large-scale manufacturing and financial services sector. Iran possesses the world's second largest and, according to some studies, the first largest proven natural gas and the fourth proven crude oil reserves. According to ERMP code, the government shall aim to continuously lower the country's dependency on oil revenues and move the national budget away from this economic sector. This would have the additional benefit of hedging our future revenues from future shocks and volatility of international oil markets. Furthermore, the constitution of the National Development Fund shall enable the Iranian government to withstand any lowering of future revenues. Iran has adopted a comprehensive strategy encompassing market-based reforms. The sixth five-year development plan to start during this Iranian calendar year has focused on ERMP by placing high emphasis on progress to be made in scientific and technological advances as well as cultural excellence. The plan envisages an annual economic growth rate of 8% in order to make up for the years of negative economic growth the country endured under international sanctions. The Iranian economy has been classified as a bank-based economy mainly due to the significant role banks have played and continue to play in providing the financial needs of the Iranian economy. Due to the small size of Iranian capital market, the absence of a real debt market, and lack of many financial products and derivative instruments, Iranian banks have always been the primary source of finance for the country. Presently, there are 30 banks and non-bank financial institutions in Iran divided in 5 categories. First, 3 state-owned commercial banks. Second, 5 state-owned specialized banks. And third, 4 national banks that were privatized. And the fourth one, 16 originally established private banks. And last, 2 Qarz al-Hassana banks. These banks collectively have 21,671 branches across the country. There is also an expanded network of e-banking which began almost 15 years ago to facilitate general public access to the banking network at any time and from any place. E-banking is today well established in Iran, and the general public fully appreciates the merits and advantages of. Public sector banks own 40% of all deposits and have provided 47.5% of all financial facilities granted. During the 10 years of economic sanctions, Iranian banks took even a more important role in the Iranian economy due to the scarcity of liquidity and the generally difficult financial conditions of the country. During these years, deposits collected nationally were the only source of funding available to Iranian banks. Banks had to ensure the confidence and trust of their clients while optimizing the use of such resources to keep the economy running almost normally. Since the signing of the Joint Comprehensive Plan of Action on July 14, 2015, and the reopening of SWIFT to all banks, please note that there were 8 banks whose SWIFT system was never cut off. A more business-oriented environment has evolved, enhancing the more apparent need for reforms in the banking sector. Once the sanctions are fully lifted, Iranian banks will also have the responsibility to raise finance in international debt or equity market, or act as borrower in front of foreign banks, acting as Iran's only financial intermediary in order to further promote economic growth. In this effort, it is important to establish ratings for all Iranian banks by the top global rating agencies. One important indicator to assess the role of banks in the economy is the ratio of commercial loans extended by banks to GDP. This ratio hit a high of 51.66% in May 2015 and is on a rising trend. It shows how active banks have been in providing funds for the manufacturers and economic agents. As an industry average, Iranian commercial banks have provided 78.8% of the total deposits as financial facilities. This kept the Iranian economy running under sanctions. Under such circumstances, bad debt seemed inevitable as severe pressures from the outside pushed upwards the cost of production and delayed the manufacturing process. Rescheduling of loans was a means to keep both the banks and the clients in business. During the past 7 years, Iranian banks have been able to reduce their troubled facilities, NPL, non-performing loans, both in local and foreign currency. The industry average for NPL ratio is 12%. As sanctions are lifted and Iran returns to normal trade, most of these loans, especially those denominated in foreign currency, shall be paid back, further reducing the NPL ratio. When banks are assessed, the indicators considered do not measure the resilience of banks, although under the sanctions, this was the most important survival parameter. When we return to a normal situation, banks shall once again focus on normal indicators, though the experience of our past should lead us to keep an eye on resilience parameters even when all things may look normal. There are a number of Iranian banks today ready to comply with Basel III requirements, indicating their awareness to move a new era. When evaluating the strength of the Iranian banking system, some points to consider shall emerge. First, the removal of sanctions and opening of SWIFT enables the banks to exercise their role as intermediaries in international trade transactions. Both state and private banks have the ability and knowledge to fulfill this role. Second, Iranian banks have the actual and potential size to benefit from economies of scale. Third, the experience gained under sanctions have provided Iranian banks, especially the large banks, the ability to tackle difficult financial issues and observe the possibility of unforeseen in advance. These banks are valuable partners for foreign financial institutions and Iran's trade partners. Even under the sanctions, economy has demonstrated some valuable merits, including existence of adequate foreign reserves, low level of foreign debt, and good performance in settlement of debts in foreign creditors, to foreign creditors. Presently, Iranian banks cover 90% of Iran's local financing needs and is expected to remain the main source of finance providers in the mid-term future as well. These banks are also able to assist foreign banks and investors who wish to enter the profitable Iranian markets and projects. In today's difficult global environment, Iran can be viewed as a safe haven permitting international firms and investors to generate considerable future income and return on their investments. Various forms of partnership between Iranian banks and their foreign counterparts can be envisaged for assisting foreign investments in particular. Such cooperation paves the way for larger future joint activities in both Iran and the region. We are looking forward to sincere partnership along the lines of resilient economy meta policy. Thank you very much. So I'm ready for questions. May I take a seat over there?
Sure, please.
Or
So, Dr. Ghassemi, I wanted to ask you a question with regards to one of the guests that we're going to be having tomorrow. One of the speakers tomorrow morning is the Deputy Lead Coordinator for the Iran, the nuclear deal implementation, and he's from the U.S. Department of State. And I was wondering what, in your position, you would want to hear from him tomorrow.
I am not a politician, actually, but so looking at the question as a banker, I will try to answer this question. So if everybody knows, as everybody knows, in Iran, the banks are doing legitimate and transparent business. So what does a transparent business body expects from the other partners? The same. And for this, I believe Mr. Blanc, I understand, is going to be most probably positive. And even I asked one of the good politicians here, Mr. Ambassador of Switzerland to Tehran, his expectation is also positive on his remarks. And I hope there's so many pressure that the European banks today feel because of that settlement agreement between them and some other partners in the United States will be released and hopefully will be lifted as soon as possible.
Are you hopeful that he's going to be saying that?
Yes, I hope to hear this. And actually, what we have done, even since 4 years ago, we have started to apply in order to get license from OFAC in the United States to concentrate on the humanitarian items. Although, unfortunately, we have been rejected. Of course, it was before JCPOA signature, but today we are going to start again to try the goodness and utmost goodness of the good faith of the Americans.
Okay. Can you elaborate on the humanitarian? What were you trying to do?
Humanitarian items such as medicine, food items, these are the items that we try to apply for the license at that time. But today we expect some technological items can be included also. Okay. ask some questions already.
Yeah, but I will.
During the consumer and retail session, it has transpired that although Iran has a very robust debit card system, and I had 85% of consumers use the system when they buy their goods in the stores, there is no credit card facility, or virtually no credit card facility. Is there a fundamental reason for that, or regulatory, or what? Why is that?
As far as the credit card in local currency is concerned, we do not have any problem. We are dealing with it positively. And it depends on the risk assessment of any customer. But when it comes to the credit card in euro or in dollar, because of these barriers that the Americans have put on the way, it is difficult and impossible. You know, Visa, Master, all are Americans, and the fact is that they should lift such barriers in order to ease the issuing of the cards. But on the whole, you know, the main problem is, or the main matter is risk assessment. You know, the Iranian banks, first of all, the KYC, okay, knowing the customers, and then assessing their risks is very important. So, as you know, according to Basel III, the risk assessment, risk management is a very key issue, and so the banks should be very active and very alert in this respect. However, I hope any customer who has any problem here, I can do just a role of intermediary in order to connect them with their banks and try to ease their business.
We had a question there, the gentleman with the blue tie.
Thank you, Mr. Ghassemi. My question is about interest rates. What is your assessment of central banks' assessment or instruction on interest rates, and how much impact do you think this will have on industrial development, and especially industrial loans to the units that need loans?
This is a question should be answered in Iran, not here, actually. But anyhow, I will try to give you an answer. You know, the fact is that during this administration, the inflation has reduced from point to point 46% to almost below 12%. It is a huge, I believe, achievement for this government. So, complying with this trend, it is very natural that the interest rate should decrease. But there is a fact that according to a report by the central bank, the interest rate cost, or the cost of money, the cost of financial facilities in finished cost of the services and goods in Iran covers only 4% of the finished cost. So it means bringing down, for instance, 20% of that, it is going to come with 3.2% in finished costs. And in the sales price, it is almost 3%. So I believe the cost of money is not the key issue in the Iranian economy, but it should have the logic, its own logic, in order to follow up the trend of the inflation and also the needs of the development and upward increasing GDP's country.
I thought I saw a raised, yeah, there you go.
Thank you very much, sir. Thank you very much, Mr. Ghassemi, for your very important presentation. I would be interested to have your views about the time. How long will it take, and which steps should be undertaken in order to have the Iranian banking system out of that area of concern, quote unquote, that was mentioned in recent reports on international major newspapers, area of concern of the Financial Action Task Force, and also the existing still valid legislation of the Patriot Act in the United States. How long and which steps also on the Iranian side could be taken in order to overcome these problems? Thank you very much.
Thank you. Again, I am not a politician, but I believe in our side in Iran, we respect JCPOA completely, and we have respected and we have implemented it according to the commitments that we have had. So we expect the same from the other side, I mean 5+1. If we take this logic, I believe very soon it should be solved, and at least we expect our partners in Europe to start working with Iranian institutions. And as I mentioned here, 90% of the financial needs of the country is covered and provided by the banking system. It means to pave the road to go forward, having joint activities with Iranian partners. Iranian banks should be involved, and for this, other European partners or the other partners in the other side in the banking sector should get active. I believe with the negotiations and dialogue that have been started between Iran and European countries, every day we are, I feel more positive signs, and I believe at most within 6 months we have to see very good results of this negotiation. But today, as you know, middle-class banks have started working with Iran. So many correspondence banking relationships has been set up between banks all over the world with their partners in Iran. But the size of these banks, as I said, is medium. For huge amount of investments in Iran that we have, we need big banks, large banks to be involved. Otherwise, the banks which should support their customers' activities and investments at the lower level or at the middle class level cannot support huge amounts of investment or projects financing. For instance, in this 6th five-year plan, we are going to have more than $180 million of investment in oil and gas. So big banks should enter in this business. But at the retail or at the small scale activities, I believe what we have done up to now, what we have achieved with some banks in other countries can be helpful. For big projects, it is not enough.
Thank you very much. We're going to have to stop the Q&A here because we have another panel upcoming and I don't want to be too late for that. Thank you, Dr. Ghassemi.
Okay, thank you very much.